Hi students, in this video I will be discussing the creditors reconciliation. So I just wrote out a couple of pointers that you would need to know before you attempt an actual activity. So the word reconciliation means where we try and get two parties to agree, or in this matter of accounting we are trying to get two businesses to agree to the same amount. So I wrote here that the creditors reconciliation is a comparison because we are comparing. It's a comparison between the creditors ledger. Now the creditors ledger is our books in which we record all of our creditors that we have in the business, and the creditors statement, which is the creditors books. The creditors statement is the creditors point of view, and basically the process of reconciliation is to identify and correct any difference so that both our business books and the creditor's business books are equal. So the rule is, or by now you should know, that a creditor is always a liability to me. Who am I? I am the business. So when you attempt the question, you are always looking at the point of you are the business and you are comparing your business to the creditor. So the creditor will always be a liability to me. We know that liabilities increase on the credit side and they decrease on the debit side. Okay, so then I wrote out a few pointers for you to know in terms of dealing with the ledger account and the statement. So when I purchase goods from a creditor, I purchase goods from a creditor and I pay later. So that's basically the definition of a creditor. That is what I do, all right? In order for someone to be my creditor, I purchase goods now and I pay them later. And when I'm not paying them immediately, but I have an account, they become my creditor. So what will happen is that when I purchase these goods, they send me an invoice, right? This invoice will state, for example, when I bought the goods, how many goods did I buy? For example, if I buy t-shirts, how many t-shirts did I buy, at what price, what I'm owing on my account, and what is the minimum monthly installment that I must pay. So an invoice, generally when you receive an invoice from a creditor, this amount means that I am owing my creditor, all right? Then if I make a payment, usually through an EFT, then the account that I'm owing my creditor must go down, okay? Also, if I receive a discount, then the account or the amount that I'm owing my creditor must also go down. And then lastly, a return, okay? So if I return goods back to my creditor for whatever reason, maybe I don't like the color of something, maybe the value of the goods was not that great, or it got damaged and it was not my fault, right? And when I return it, I can't pay them for something that I gave back to them. So my account will go down, or the amount that I owe the creditor will go down. And we issue a creditor with a debit note. Why? Because a creditor is a liability to me and my liability will decrease on the debit side. All right. So this year for the return, I just want you to note that the creditor will send you a opposing credit note when the return is accepted. Now, why a credit note? Because according to the creditor, right, you are an asset, you are a debtor, okay? You are a debtor, and we know that debtors increase on the debit side and decrease on the credit side. Therefore, they send you a credit note when they are decreasing your account, all right? Then I wrote down guidelines of which you just need to follow if you get stuck, because it can become very confusing if you are not following a set pattern. So number one, you're going to analyze the transaction using common words. invoice, EFT, debit note. So please make sure that you know all of these, what these mean, and what will it do to your account. All right. Underline these keywords when you see them, then you're going to find out who made the mistake. When you are comparing in the creditors reconciliation, it's either that you made the mistake or the business made the mistake. All right. If you made the mistake, then you correct in the creditors ledger. If the creditor made a mistake, you correct in the creditor's statement. Actually, let me write that down. If you made a mistake, meaning the business, you're going to correct in the creditor's ledger. But if the creditor made a mistake, you're going to correct the creditor's statement. All right. So it's either one person is incorrect, then obviously the other will be correct, or maybe both parties need to be corrected or updated about something. And then the third thing you're going to do is you're going to ask yourself, what will this do to my account? Either it's going to increase my account or it will decrease your account. So now we are going to go to question 2, which you already have this question. So it will be nice if you can take out your question paper now and follow. Let me just zoom out a bit so you can see the entire paper. All right. I'm not sure if it's that clear, but I think it's okay. Right, so it says Clear Traders buys goods on credit from Mariti suppliers. It says use the table provided to indicate changes to the creditor's ledger in the books of Clear Traders and the creditor's reconciliation statement on the 31st of July 2018. So the creditor's ledger of Clear Traders, meaning that we, Clear Traders, is the business. So this is the business books. Now in the business books we have multiple creditors, but one of our creditors is Mariti suppliers. Mariti suppliers is a liability to me, and therefore they increase on the credit side and they decrease on the debit side. Then we receive a statement of account from Mariti suppliers. In Mariti suppliers, we are a debtor to them. Okay, so if Mariti is my creditor, then obviously I'm the debtor. Who's the debtor specifically? Clear Traders. So we receive this from our suppliers, and because we are a debtor to them, then my account will increase on the debit side and decrease on the credit side, right? It's basically opposites. Then how will you read the statement? So for example, let's start with the creditors ledger in our books. The balance at the beginning of the month was 67,500, which means that at the beginning of the month, according to me, the business Clear Traders, I was owing Mariti suppliers 67,500. Then I purchased an invoice for them, okay? Then when I purchased the invoice, sorry, I didn't purchase an invoice, but when I purchased goods on credit, they sent me an invoice. And the invoice that I purchased, the amount that I purchased for was 81,000. So it increased my balance. Then an EFT reference would mean that I paid them, and the amount that I paid them was 33,750. Then I return goods of 8,640. Invoice. So I purchase goods here, and then the list will go on and on. But what you should know is that each time the balance is going to be updated. So at the end of the month, according to me, the business, I owe the business 147,820. But if you look at the statement, according to them, we owe them 145,060. So between the creditor's ledger and the creditor's statement, we are going to try and find the differences, find out who's wrong, who's right, and rectify the mistake. Okay, so for this particular reconciliation, the creditor's reconciliation, there's no set format, so we are just going to divide our columns. We'll say creditor's ledger, which again I must state that this is our books. According to our books, Ms.KB Suppliers is a liability. And then this is the creditor's statement. Okay, that's a bit untidy, but just have to move on. Okay. Right, so the differences on this page here, just at the top. So let us try bring this here and then, okay, so let's start with the differences. So the first thing that you are going to do is obviously enter the balances according to the business and the creditor. So according to the business, we owed 147,820 rand at the end of the month. But according to the creditor statement, they are saying we owed them 145,060. So we are trying to reconcile these two amounts. So it says the incorrect entry for debit note, you're going to underline the word debit note 674 in the creditor's ledger. So they say in the creditor's ledger. Automatically the lights must go off in your head that according to the incorrect entry in my books, the business books, right? So who is wrong? The business is wrong of Ms.KB Suppliers relates to the correct credit note of 741 on the statement. So basically in this one, I am saying that the creditor's ledger is wrong and the creditor's statement is right. So when I analyze this transaction, there are two things that sticks out to me. Firstly, a debit note. A debit note would mean that I am returning goods, and when I return goods, usually, or what will happen to my account is that my account will go down. The second thing is that I am wrong. Who am I? I am the business. It says the incorrect entry, debit note 674. So I must go to my books and correct the error. So let's compare the debit note 674. So if you compare debit note 674 in the creditor's ledger, this is for 8,640. So I'm going to circle it here. And then the credit note 741 is for 6,840. So basically I am saying now that in the creditors ledger, they said that this was incorrect. And then according to the creditor statement, so CL obviously would mean creditors ledger, our business. CS would mean creditor statement, the creditor or the supplier. They are saying we return goods for 8,640. Or we are saying we return goods for 8,640, but we were proven to be incorrect. The correct amount is this amount here, 6,840. So this probably is just human error. And the statement was right. So the difference here is 1,800. Now, your understanding of the question makes a difference. So this is how you are going to interpret the question. You are going to say that I returned 8,640, but it was wrong. Okay, I actually only returned 6,840. So I am still owing the creditor 1,800 more. Right? One more time. I am saying that a debit note was issued. When this debit note was issued, it was a return of goods. For the return of goods, I only returned 6,840, but I recorded it as 8,640. So rightfully 1,800 is still owing to the creditor. So when I go to my answer sheet, say A plus 1,800 under the creditors ledger, because the statement was right, it was I, the business, that was wrong. Okay, now we are going to move on to the next adjustment. So it says invoice 282. Again, what does an invoice do? An invoice increases my account. An invoice was incorrectly, you're going to underline incorrectly, reflected in the account of Mariti suppliers in the creditors ledger. So again, this is my books. It says the goods were purchased from Genesis suppliers. So basically what this transaction means is that in the books of Clear Traders, I have multiple creditors in the creditors ledger. I have Mariti suppliers, and then the other one is Genesis suppliers. I bought from Genesis, but I entered it into Mariti suppliers, meaning that my account went up. But I must decrease the account now because I did not purchase goods from Mariti suppliers. Then you're going to ask yourself, who made the mistake? It says specifically, invoice 282 was incorrectly reflected in the ledger. So I'm going to look for invoice 282. Invoice 282, 40,950 does not belong here. That must go to Genesis suppliers. And if you are thinking, okay, shouldn't I correct Genesis suppliers? Yes, you should add this amount to Genesis suppliers account, but that is the accountant's job, and today you are only responsible for reconciling these two businesses. Okay, so I'm going to say B, and I'm going to minus the amount of 40,950. Then moving on to the next transaction, it says invoice 360. So invoice 360 was incorrectly recorded on the statement of Mariti suppliers. So now here, what do I notice in invoice? What does an invoice normally do to my account? It increases my account because I purchase goods from the creditor. And again, the creditor is always a liability. Liabilities increase on the credit side. But it says it was incorrectly reflected from Mariti suppliers, which means here that the creditor's ledger was correct and Mariti suppliers was wrong. So in this instance, it was the supplier who made the mistake. So I'm going to go find invoice 360. There's it here, invoice 360. It was 20,250, which is wrong. But when I look at invoice 360, according to us, we actually purchased goods for 50,250, which was right. So again, I'm going to compare. I'll say in the creditor's ledger, I purchased goods for 50,250. In the creditor's statement, I purchased goods for 20,250. This is a difference of 30,000. Okay, and it said that the statement was in fact wrong and the creditor's ledger was right. It was an invoice, and obviously I am owing the creditor 30,000 rand more. So I'm going to go to the person who made the mistake. That was the creditor's statement, and I'm going to say plus 30,000. Okay, moving on to the next one. It says Mariti suppliers also purchase goods on credit from clear traders. Okay, so from the very first sentence where it says also purchase goods on credit, it means that there is an inverse operation, or not operation, there's an inverse relationship, meaning that as much as we purchase goods from Mariti suppliers, our creditor, they also purchase goods from us. So a debtor creditor vice versa relationship lies between Mariti suppliers and clear traders because they also buy goods from us. That means in our debtors ledger, where we have all the debtors, Mariti suppliers is there. So it says clear traders has transferred a debit balance from the debtors ledger, journal 570. Mariti suppliers will offset this on the next statement. So basically, because Mariti suppliers also purchase goods from us on credit, we are offsetting this amount, all right? Because it's saying the same thing. I owe you, but you also owe me. So what we are going to do is we are going to compare the figure. Now, according to journal 570, it was 5,400. Now, if you look at the statement of account, there is no journal 570 because it specifically says Mariti supplies will offset this on the next statement. So we are going to go and update Mariti's balances. Now, the trick here to always get this question right is basically to just read what they are telling you with understanding. So in the debtors ledger, right, which is an asset, we have Mariti suppliers. And their account increases on the debit side and decreases on the credit side because Mariti is a debtor to me also. Now they have a debit balance of 5,400. And it says specifically here that this debit balance was transferred. Transferred to where? It will now go to the creditors ledger. Why? Because Mariti Suppliers is also a creditor to me. So in the creditors ledger, it will increase on the credit side and decrease on the debit side. So when I am transferring, here's my entry here on the debit side. It did say they are transferring a debit balance. So to get rid of this, to transfer it to the next ledger, you're going to say 5,400 here. Then for every debit, there is a credit. That is the rule of accounting, right? The double entry rule. So if it's on the credit side here, it will be on the debit side here. 5,400. Another little trick is that wherever the balance is, provided that you know the signs, all right, if you are transferring it here and the sign is a minus, it means that on this side it's going to be a minus when you also transferring it. Okay, so you are going to minus 5,400 from the statement because we are updating Mariti Suppliers. So this is D minus 5,400. Okay, then it goes on to say the transaction on the 24th of July is for merchandise returned. So when we return goods, our account normally goes down and we issue a debit note to Mariti Suppliers, all right? So if I look here, this is the transaction on the 24th, debit note 995. So let's just change the color now. That's 8,100. And then, so the opposing credit note would be credit note 811 for also 8,100. But what do you notice? They are both in the same column. Okay. If I am returning goods in my business, no, if I am returning goods according to my business in the creditors ledger, I'm supposed to enter this 8,100 on this side. But I entered it on the credit side, and the credit side increases my account. So basically what I did is I went and said, I owe Mariti Suppliers 8,100 more, which is wrong because if I return goods, I don't owe them that money. Okay? So in order for me to get rid of it, I'm going to say minus here 8,100. But plus 8,100 and minus 8,100 will give you 0. So did I do anything? Absolutely not. I was supposed to make the entry here. Instead, I made it here and I made a mistake. But by entering it on the debit side now, I just corrected the mistake that I made. I never actually bring the account down. So I will make another entry of 8,100 to do what I'm supposed to do initially, which is return the goods in order for this to be reflected, that I am actually returning goods of 8,100. So who made the mistake? It was definitely me, the business, because I entered it on the wrong side. I'm going to enter 8,100 once for the mistake that I made, but it's going to balance off to 0. So again, to rectify the mistake that I made and actually return the goods. So you can say 16,200, But if you mistakenly miscalculate, then your final answer could be wrong. So I encourage you to show the working out like this. Okay, and then the last one says the statement reflects transactions up to the 25th of July 2018. So if you look at the statement, there's no 25th, there's actually the 24th. So according to the statement, they only have knowledge of what took place from the 1st to the 24th. But if you look at our business, according to our books, we have processed transactions after the 24th, which is the 27th and the 31st. And the business doesn't know about this. So we're done with this journal 570, which just leaves us with the 31st. And on the 31st, we made an EFT payment of 75,000, which means that we paid the account, it brought our account down, and then we also received a discount of 2,190. So we are just going to go and update the statement because they ended on the 24th. It ended on the 24th and they do not know that we paid. So I'm going to go to the statement and I'm going to say minus the 75,000 that I paid and then minus the discount that I received. Okay, and then that is the end of all the adjustments. So what you're going to do now is simply add both sides together, and if both sides are equal to each other, that means you have reconciled both the creditor's ledger and the creditor's statement. So we're going to say 147,820 plus 1,800 minus 40,950 minus this will be 16,200, and we're gonna get 92,470. Okay, then I'm going to do the same for the creditor statement. 145,060 plus 30,000 minus 4,500 minus 75,000 minus 2,190, and I'm going to get 92,470. You will notice that both of these numbers are equal, and you have now reconciled your books, the creditor's ledger, with the creditor's statement. I hope this question helped you. Good luck for your test.